So enough of Canadian economy, now back to macro, global macro. So today the market puked because the job numbers in the US and also in Canada came stronger than expected. So in the US, the market was surprised to see 94,000 more jobs than it was expected by the economist, which means the Fed pivot is almost dead. Okay, so Fed, when they start cutting rates back in September, they stated that they are more concerned about the rising unemployment. They're more concerned about jobs not being created compared to the population growth, which is why they cut 50 basis points. Okay, so they were not concerned about the inflation anymore because inflation was coming back down to their 2% quote unquote target. And since then, the bond market has been spiking up. So the US 10-year Treasury yield right now is basically above 4%. So that is telling the world that they're not believing on Fed's narrative that the inflation is done and dusted and the economy is not growing, and they're trying to basically stimulate the economy by cutting rates. Okay, so that's really the whole narrative from Fed. And since then, the bond market is saying no, we don't trust you. We expect inflation to come back, which is why the bond yields, 10-year bond yield, is going up since Fed starting cutting rates. And if you look at the financial conditions, it has been the loosest since Fed started hiking rates. So what's going to happen? So the market, tanked this morning when the job numbers came out. We saw the Canadian 5-year bond yield went up as well because the job numbers in Canada also came stronger than expected. But there is a reason as well, because we just went through the holiday period, and of course, in holiday period we have a lot of temporary jobs, created. Now we have to see next month if the trend continues. If the trend continues, then of course that means the economy is getting better. This may create a risk of inflation acceleration, because if the central banks across the world, including Fed, is cutting rates aggressively, the market will start expecting that this may accelerate inflation. Okay, because Fed is stimulating, all the central banks are stimulating, Bank of Canada, ECB, Bank of Japan, PBOC in China. They all are cutting rates. They all are trying to stimulate the economy, trying to contain the unemployment rate. But maybe we have hit the bottom. Who knows? Because this is all about number crunching, and data is sometimes manipulated. My take is because the holiday period was full of temporary jobs, so this could be a temporary spike in terms of the job numbers and reduction in unemployment rate. I'm not worried about inflation as of now, but who knows, right? Things could change. We have to see next month data. If the data comes stronger when it comes to job numbers, then it may be an indication of the trend changing going forward.
When it comes to investing, staying informed is everything. That's why I've been diving into Moomoo. It's got some tools that are pretty useful for navigating today's market. For example, Moomoo gives you free access to real-time level 2 market data, advanced charting tools, and professional grade research. The kind of stuff that you usually pay extra for on other platforms like Questrade. And let's not forget the low FX fees. If you are trading in the US stocks, like myself, I don't trade TSX. Those savings can really add up over time. Pair that with the insight that you're getting, it's a game changer for making informed decisions. Plus, while you're waiting for the right market moves, your idle cash earns a solid 6% annual return through their Cash Plus feature. That's a nice bonus. So whether you're trading actively or just keeping an eye on the market trends, Moomoo is definitely worth a closer look. So you can start investing today by clicking on my referral link, which will give you $50 free credit to start with.
Thank you, Moomoo, for sponsoring this video. Nothing from this content should be deemed as a financial advice. Please consider all the risks associated with the investing. Terms and conditions apply. So what does it mean? A lot of things. I think it's too difficult to navigate, because now Trump is getting into the power. He's going to unleash a lot of stimulus in the US because he wants to stimulate the economy, right? He's going to put a lot of tariffs on other countries, including Canada. That would create a lot of problems for the global economy, right? So China, Europe, Canada, we will see a lot of volatility in terms of the bond yields, in terms of the market, stock market, and the currency, because US dollar right now 109 on DXY. So if the US dollar keeps going up, it's going to create a lot of issues in the global economy, especially in the emerging markets, because they struggle. Their debt becomes expensive, their debt servicing cost becomes expensive, their imports becomes expensive because all the commodities are settled in dollar. So dollar is getting stronger, Gold is up above 2,700 an ounce. Yields are spiking up. We don't really see gold and dollar going up at the same time. This is rare, guys. This is rare, which means we're going into a lot of uncertainties. Right now, the market is so confused. What's going to happen? Nobody knows. So there will be a lot of volatilities. There will be a lot of volatilities going forward until Trump takes the power, settle down, and then we'll see the clarity in terms of his policies, what he's going to do. But as of now, a lot of volatilities expected, and things can go either way. Anyway, you let me know what you think about that. Put your comments down below. And if you like this video, give me a thumbs up, subscribe, and I'll see you in my next video. Take care. Financial education is very important for everybody, especially for the kids who are still at school, because when they grow up and go into their professional lives, if they don't know how to manage their finances, that is going to be a disaster to begin with. I have just published an ebook for the kids aging between 10 and 16 years to understand how they can manage their finances. So when they grow up, they know exactly how to manage their personal finances, because I have broken it down at a very, very basic level. What is money? How can we save? How can we invest? What is debt? How can we use debt? What is credit card? And how we can set ourselves for the financial future when we go into our professional life. So if you are a parent looking for a very simple to use ebook for your kids, click the link below to order the copy for your kids, and let me know what you think about that. Let's get back to the video.